This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rebounded more than $1 a barrel on Monday after producer group OPEC Plus decided to increase output in July by the same amount as it did in each of the prior 2 months, which came as a relief to those who expected a bigger increase. Brent crude futures climbed $1.46, or 2.33%, to $64.24 a barrel by 0626 GMT after settling 0.9% lower on Friday. U.S. West Texas Intermediate crude was at $62.45 a barrel, up $1.66, or 2.73%, following a 0.3% decline in the previous session. The OPEC Plus decided on Saturday to raise output by 411,000 barrels per day in July, the third month increased by the same amount, as it looks to wrestle back market share and punish overproducers.
The crude oil market devotes considerable energy to what OPEC Plus says, but perhaps a little less to what it actually does when it comes to the supply of the world's most important commodity. The 8 members of the wider group that had implemented voluntary production cuts met at the weekend and decided to raise output by 411,000 barrels per day, BPD, in July, the third straight month of the same increase. More than half of the lift in output will be split among the big 3 of the OPEC Plus group, namely Saudi Arabia, Russia and the United Arab Emirates.
Moving on to the top news in the energy sector.
The International Air Transport Association said on Sunday it expects the amount of sustainable aviation fuel produced to double in 2025 to reach 2 million tons, representing 0.7% of airlines' fuel consumption. Influential industry body IATA has increasingly been warning that airlines will struggle to meet their sustainability goals, and has described the production of SAF, which is more expensive than conventional jet fuel, as disappointingly slow. IATA Director General Willie Walsh said that while the production increase was encouraging, the relatively small amount will add $4.4 billion globally to aviation's fuel bill.
The Big Star, a huge tanker with 2.1 million barrels of Russia's ESPO blend oil on board, has been waiting near China in a potential sign of weaker demand for the crude in the region, LSEG data showed and 2 traders said on Friday. Many state oil companies in China are wary of potential secondary sanctions from the United States if they buy the sanctions hit Russian oil, traders said. China's seaborne oil imports from Russia dropped to the lowest in 26 months in February, with commodity analysts Kepler assessing arrivals at 970,000 barrels per day. Next, we have the top news in metal markets. Gold prices rose more than 1% on Monday as an escalation in the Russian war in Ukraine and U.S. President Donald Trump's fresh threat to double tariffs on imported steel and aluminium prompted investors to seek refuge in safe haven bullion. Spot gold was up 1.2% at $3,326.45 an ounce, as of 0606 GMT. U.S. gold futures rose 1.1% to $3,351. Trump said on Friday that he plans to raise tariffs on imported steel and aluminium to 50% from 25%, prompting the European Commission to warn that Europe is prepared to retaliate.
Shares in South Korean and Vietnamese steelmakers, major Asian exporters of the metal to the United States, dropped on Monday after U.S. President Donald Trump said he would double tariffs on imported steel and aluminium to 50%. Trump announced on Friday the new steel and aluminium levies, which take effect on June 4, intensifying a global trade war just hours after he accused China of violating an agreement with the U.S. to mutually roll back tariffs and trade restrictions for critical minerals. Steel industry experts said that while the increased tariff would cause significant disruption for major exporters to the United States, the rates could go down in light of some of Trump's trade policy reversals.
We will now look at the top news in the agricultural sector.
Chicago soybeans lost more ground on Monday, with the market trading near its lowest in about 3 weeks on pressure from beneficial weather in the U.S. Midwest and uncertainty over biofuel demand. Wheat prices inched higher while corn slid. Soybean demand issues are still a bearish factor for the market, said one oilseed trader in Singapore. US weather has been benign for the crop, so we are not worried about the crop at this stage. The most active soybean contract on the Chicago Board of Trade fell 0.4% to $10.37 minus 1/2 a bushel, as of 0357 GMT, having dropped to its lowest since May 8 earlier in the session.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.